Welcome to the High Value Sales Show of Eversprint.com. I'm Malcolm Louie, the managing member of Eversprint, and today we're speaking with Jonny Fowler, a senior VP at Hancock Mortgage, in charge of business development and production. Welcome to the call, Jonny.
Thank you, Malcolm. I appreciate it.
Jonny, Hancock Mortgage's branch network grew from one state, 3 offices, 15 to 18 employees 5 years ago, to over 30 states today with 42 offices and 200 employees. Before I ask you about how you're able to help your company grow their branch network so rapidly, can you elaborate a little bit on what Hancock Mortgage does exactly, and also share how your company differs from all the other mortgage banks that are out there?
Yes, sir. I'd be glad to. So I guess what helped us grow is the need in the marketplace for a community lender. There's a lot of extremely large lenders out there that, in my opinion, it's just about numbers. It's how many people they can force through the system. And what I think and what I thought at the time is this market truly needs somebody who is a community lender who will sit down and not only explain to you what it is that you're getting ready to do in the purchase or the refinance of your property, but also somebody who can be there whenever something arises, whenever something is going through the system, someplace that you can actually go and sit down and have a cup of coffee with that individual who you're trusting your largest transaction to and be able to look them eye to eye. That was something that was very important to me, and this market needed that. At one point, I had built the largest mortgage company in this country, privately held, and it was a fun company, but it was lacking in that community feel, and that was something that was greatly important to me.
You talked about community feel, but at the same time, you're in over 30 states now, 42 offices. How do you still do that?
Very much so. So where my offices are where customers need me. As opposed to being in Manhattan, New York, I'm in Johnson City, Tennessee. I'm in Palm Coast, Florida. I'm in Sugar Land, Texas, Vacaville, California, things like that. It is having that local presence, that local footprint of the local community's peers, but having an incredible back office support system that is able to stay up on technology, able to stay up on regulatory compliance, and able to stay up on lending issues as they come across the country, but having that true community feel, that true handshake, eye-to-eye business.
From a bigger picture perspective, looking back over the past 5 years, what do you think were or are the biggest drivers of your company's growth?
I guess it would be, like I said earlier, the need in the market, but the customers, as far as my customers, my loan officers, my branch managers, having that need, searching for that last place that they're ever going to work, finding that community type program where you never have to go look for a job again. One of the things that we know with these larger investors, with these larger lenders, is you're just a number on a payroll stub on your paycheck. And it was the people that were flocking to us that had the want and the need to not worry ever again about having to find a new place to work, but having that substance and that quality behind them to be able to get them where they want to be. See, it doesn't really matter what I want sitting in the corporate office. It matters what my customer, who's my branch manager, my loan officer, my processor, my underwriter, it's fulfilling their needs. What is it that you need to be able to perform in your marketplace and not only stay on top, but dominate in your field, in your area? What is that you need?
Okay, so the first one is the need and the market for a mortgage lender that has a community-first mentality. And then the second one is finding people, branch managers, agents who want to work at a company that can potentially be their last job, but at the same time can give them the opportunities, the things that they want to achieve in their career.
Yes, sir.
Is that right?
Yes, sir.
Okay. Is there a third factor?
I guess there always is. So you also have to have somebody who stays on top of technology. One thing that we know is technology changes on a daily basis. If you're doing the same thing in 2019 that you did in 2018, you're probably going to lose business. So it's staying on top of what is the latest and greatest and best technology, doing it in a reasonable type setup system to where you're not buying every piece of software that comes down the pike, but you're actually implementing whatever software systems it is and making them work at their prime abilities. See, one of the things that we do is we try and help our direct customer, which is our loan officers and our branch managers, to be able to service their customers. So if that means later hours, if that means phone apps, if that means online, whatever that means, I have to fulfill that for my customers so I can keep my attrition rate where it is.
Okay. Can we elaborate a bit more on your three biggest drivers? So the first one, the need in the market for a mortgage lender that's community focused. How do you identify where these markets exist? I mean, I see that you're in over 30 states now. You're not in all 50 of them, so I'm assuming you might not be, partly because you haven't identified a market that can use your company's services the way you like to deliver them. Is that it? Or is there some other factors?
That's a great question.
That come into play?
I don't actually go into communities or into states with the idea to take over a market. What I do is I wait for somebody in that area, that market, to come to me with a system that fits within inside of mine to make sure that we're going to be able to collaborate together. And then at that point is when I go into a market. I go into that market heavy at that point. I don't just pick out an area where sales, let's say Nashville. Nashville's been hot and heavy for the past few years. I don't just go into Nashville, open up an office, and hope that I get people to come work there. It's the people who matter more than anything, and it's those people reaching out to me saying, hey, I love what you guys are doing. I love how you generate leads. I love how you're putting business together for us. I want to be part of you, and I want to do it right here in Franklin, Tennessee, or whatever that may be.
Okay, so these people who are reaching out to you, are they branch managers of existing mortgage companies? Maybe they're a smaller one. Maybe they have their own small mortgage company. Or are they loan officers themselves who see what you're doing and they reach out to you and say, hey, I'm really interested in how you do things. Can we work together? It's
a wide gamut, to tell you the truth. So it's existing branch managers at companies where people feel lost and unneeded. It is loan officers that are in branch offices that just have no voice whatsoever inside of that office. It's people who have their own company that are tired of trying to keep up with all of the regulatory compliance or payroll or all of the human resource issues that come across. Nobody ever got in this business to write paychecks. So it comes from a wide gamut. And it's not one or three or five specifics. It comes from dozens of different areas and dozens of different reasons why they come here.
Okay. So I can see how if a branch manager reaches out to you and if a owner of a small mortgage broker reaches out to you, I can see how you can open up a new office fairly quickly from that. If a loan officer reaches out to you, then how does that work? Do you help them set up a new office, or do you say, yeah, okay, we're interested, we'll keep in touch, let us find a branch manager or another operation first, and then we'll fold you into it?
No, I do loan officers also. I follow HUD's guidelines on minimum 3 years single-family dwelling mortgage business history, but I will take care of everything for the loan officer. I've been in the branching business now for about 20 years, and I've learned quite a bit on my way up and quite a bit on the way down. So having a loan officer want to be in that position is not any issue for me. I asked them to find somewhere between 1 and 3 offices that meet their needs, that are safe, that are things that they want to look at. They do that. I actually go out personally and open up every office myself. We sign the lease. I set up the equipment, whatever's needed. So not every office is open the same, but every office theoretically is built the same way. Leases are in my name. The equipment is supplied by me. Everybody is a W-2 employee. And it doesn't matter if they're in an existing office or not. I'm going to make sure that those people have no worries, that I take care of everything right from the beginning. So when they hit the ground the first day that their license is active, then they hit the ground running because they have no worries. Everything's already been taken care of for them.
So a loan officer can approach you and you can help them open an office, and that loan officer might be potentially the only person in that office.
Yes, sir. I've got no issue with that whatsoever. Sometimes that works out better. I will tell you that what I've seen over the years is the most profitable offices, the ones where the work is rewarded, happen to be single or no more than 2 or 3 originators in an office, and then stack the office up with support staff.
Right.
Make sure that the customers have the best service, the best possible transaction that they can have.
Right. And then for a branch manager who comes to you, they might actually have a team that they would bring on board as well.
Yes, sir. Just onboarded an office in Vacaville, California. It was a branch manager. There's a total of 13 employees. They close about $7 million a month, and did the same thing. They had an existing office. I took over the lease. I supplied the equipment. I went out for 2 weeks, set up everything from internet provider to chair massages while everybody was making the changeover. So they were happy.
Okay, so you've elaborated a bit on the first 2 drivers, the need in the market and searching for branch managers and people to open the branches. How about the third one, about staying on top of technology? Can you share a bit about how you do that? When you say, hey, this is something that can add value, we're going to bring it on board and roll it out to all of your branches. Maybe give an example of something.
Yeah, of course. Of course. So there's a couple things that need to go with this one. So I'm getting to your point, but there's a reason I'm answering it the way that I am. First of all, one of the things that we do that makes us way different than any other mortgage company out there is every year we have a advisory board meeting. And on that advisory board is anywhere from 20 to 30 branch managers at a time. And it is exactly what it sounds like. They advise the 3 people who run this company on what we need to look for, what we need to improve on, how we need to improve on it. And then we spend 3.5 days doing nothing but that, locked in a room. So if you looked at it from a board of directors standpoint, let's say it's 25 against 3. So it's very easy for 3 people to be outvoted. But
right.
By doing this, we find out what other people, because, you've got to remember, vendors are calling my guys every day. Not only are recruiters calling them, but vendors are calling them, showing them the latest widget and gadget, sparkly or whatever it may be. So having them as boots on the ground on top of being a strong mortgage company, having vendors come here, we're always seeing what's going on. Now, closer to your point, one of the things that I brag about, and I get a kick out of it, because people in this business, for some reason in the mortgage business, we think that we have climbed the mountain and we're at the pinnacle and we need no one else to help us. I don't believe that. I never have believed that. So at any given time, I've got anywhere from 2 to 3 business coaches going. One, it helps me look and see what's outside of my realm. 2, it also gives me that fresh opinion outside what's going on. So we use outside help also to make us better. So finding and using the proper technology is something that is a daily, I guess, gratitude. Just love the fact that it's out there. Finding the right ones usually seem to be pretty easy. I think we all have a pretty good gut opinion, and as long as I'm right 80%, 85% of the time in implementing something, then I'm happy with that. That's, in baseball, I'd be the highest paid guy in the league.
Yeah, and that's a good spot to be in as well.
Yeah.
Now, can you share a little bit about lead generation? You mentioned that earlier in our conversation, and it looks like there are two different models here. There are and I interviewed a couple other mortgage banks already. One of them does help with lead generation for their loan officers, and another one doesn't. So it sounds like you're in the former. You help with lead generation. What's their thinking behind that?
A couple things. I think there's probably multi-factors to the lead generation business. I'm not a fan of leads. I don't ever want anybody to rely on leads. I've had friends, I've actually had family members that relied on leads. If it wasn't for X-Tree lending or something like that, they had no business. What I can tell you, though, is if you control the lead generation, if you build your own leads, then you have something to actually give back to your referral partners. You've got something that can actually mean something in the marketplace. So at this moment in time, I guess last time I actually asked, with Facebook, I am the largest real estate lead funnel in the country. I run about 750 Facebook pages. I advertise to somewhere between 80 and 100 a day. And I generate purchase money leads directly off of social media, not only Facebook, but all social media. Facebook's just the best one right now. By doing this, I have something to give back to my referral partners. What I mean by that, one of the things when I was brought into this business in 1994 is, I was given the proverbial rate sheets and donuts and told to go get business. For some reason, this real estate agent was supposed to trust me with that one and only transaction they had for this month. They didn't have a clue who I was or if I was ever going to be able to close it or if there was going to be a closing date or anything, but they were supposed to trust me with it. And one thing I learned really early on is I need to be able to give back to the people who are giving to me. So that's one of my greatest things is I love the fact that we build leads to give back to our referral partners. So our referral partners aren't the only ones who are always giving. It is a true business relationship. We are both helping each other in our businesses. And by doing that, we're helping the consumer, who is the most important of all.
Okay, so the leads you're generating aren't necessarily for your branches and loan officers?
They are, but you've got to remember a couple things. First of all, nobody wants a mortgage. I've never, ever heard anybody get up on Saturday morning after watching one of those Fannie Mae commercials and said, God, I want a mortgage so bad. But everybody wants a home. Everybody wants a lifestyle. Everybody wants a place to call their own, or at least 69% of the country does. So what my job is to produce leads for my loan officers across the country. But there are things that they're not allowed to do. They're not allowed to talk about size. They're not allowed to talk about price. Those are licensable activities that you have to have a real estate agent for. So there in turn is where I have to have a real estate agent help me out with any of the leads that I produce.
Okay, can you share a little bit about how you produce the leads, and then once you get the lead, how you bring in the real estate agent and how they in turn work with your loan officers on that?
Yes, sir. So like I was saying, we have about 750 Facebook pages. We've got a number of Instagram, LinkedIn, Twitter, just basically all of the social media aspects that have some sort of return on investment. We have pages for them. We have algorithms set up that when people are in search of a home, when they're in search of a neighborhood, when they're in search of a community to live in, then I advertise to them. And as I advertise to them, they click on my information. They fill out their information twice. I do a double opt-in system. And then by using the latest and greatest technology, I'm able to distribute these leads to the field within milliseconds. So if you'll picture it this way, if somebody goes on my Facebook page, Hot Homes of Katy, K-A-T-Y, and they fill out the information in less than 2 seconds through a SMS message on the phone app that I provide my people, they have the information for that person who's looking for a new home. They have their name, their email address, their cell phone number. And at that point is when we can actually help those purchase money customers who are looking for something when it's convenient for them, not when it's convenient for me. One of the greatest problems with leads is people want them to close when it's convenient for the mortgage person or convenient for the real estate person. And in my systems, we make it where it's convenient for the borrower.
So who gets the leads now at this point? You're sending to the real estate agent?
Send them to the mortgage person, send them to the real estate agent. Depends on what they're looking for, what they've asked for, what the potential customers ask for.
Okay. And now you said earlier that there's some restrictions on what the loan officers can and cannot say. They can't talk about the size of the loan, I suppose.
No.
Or
they can talk about the size of the loan. What they can't talk about is the size of the home.
Okay.
And I'm not sure if you've got a mortgage background or not. What they cannot do is I can't have a borrower, for instance, say, hey, Malcolm, do you know how big this house is? It's not really okay for them to say, oh, it's 1,700 square foot according to HCAT or something like that. They get the question asked of them, do you think $200,000 is a fair price for this? They can't answer questions like that because it's not something that's a licensable activity for a mortgage person. Only a professional licensed real estate agent can help them with those questions.
Okay, got it.
That's why, and I hate to interrupt you, but that's why it is so important to believe in, trust, and truly work as a team with true real estate professionals.
Right. So you're sending the lead to one mortgage person and one real estate agent, and they both have the understanding that they need to work together on this lead.
Correct.
Okay, so it's not being sent to multiple mortgage people
never.
And multiple agents.
Never.
Okay.
No, never.
Okay. And you must have systems in place to make sure that both of them are following up and working together collaboratively on the lead.
Yep. We've built out some incredible systems. I've got in-house, I have 3 programmers. Outside of the country, I have 2 programmers that build out my systems to where everything happens in precision timeframes.
Right. Okay. Now, you mentioned this phrase a couple of times, purchase money customer. Can you elaborate on that?
Yeah. So after being in this business for 25 years, one thing that I've learned is it's more important to help that person who is buying their first home, buying their move-up home, buying an investment property, as opposed to being one of those companies that's somewhat famous for just refinancing people month after month after month. I want to help the people who have a time frame that matters. If a kid is starting a new school and they need to close in July for that kid to start at the new school, that's my customer, as opposed to somebody who wants to refinance for an eighth of a point or a quarter of a point better, and they may not have the sense of urgency that is necessary. We set up a closing date, and then they have to go on a trip to Europe or something along those lines. It's the first-time home buyer that means everything in the world to me. It's that dream home buyer. It's that first-time investment person that means everything to me.
Now, purchase money customers, is that the internal phrase that Hancock Mortgages uses, or is this an industry-wide?
It's an industry-wide term. Okay. People may say it in a couple different, colloquialisms, but it's an industry-wide term.
Okay, got it. Now, you also said earlier that you're not a fan of leads. So while you do provide leads to your loan officers, your branch managers, you are encouraging them to generate their own. Is that correct?
Yes, sir. And I will say on any given day, 95% of my guys' business is self-gen.
Okay. Any thoughts as to how they're generating their own leads?
Yeah, we bring value to the marketplace. That's one of the best things that I think that you can do, as opposed to just being a leech on your referral partners. Bring value to the marketplace. So one thing that we have the benefit of is knowing some pretty influential people in this marketplace, in this industry. So it's doing things like bringing people like Barry Habib to a local market that would never be able to see somebody like him. It's bringing Brian Stevens and Frank Gray to a local market. It's bringing what we learn through our external coaches to a local marketplace. And I'll give you a couple examples. One of them is we teach a modern marketing class all over the country. I think I had 101 or 102 flights in 2018 going all over the country, helping people in local areas understand how to use modern marketing, from social media to whatever else is working out there. I'll give you another example. So I have an office in Palm Coast, Florida. One of the real estate agents that we do business with there got a lead with a builder on 18 homes that if we would take over and help them do marketing for this subdivision, that this agent was going to get the listing on 18 properties. So I got on a plane, flew there, met with the builders, and together we came up with a game plan to help this real estate agent get that business. So I may not get one single referral from those 18 homes, but what I did is showed my referral partner that I'm willing to stick my neck out and help you with whatever business it is that you're going to grow.
So you actually helped a real estate agent win 18 homes for listing.
Yes, sir. And I've got another appointment to do it next week in South Carolina.
Well, I imagine that for every home that they sell, and when their clients ask them for a shop to talk to about helping them find a mortgage, I imagine Hancock Mortgage is top of mind for him.
Hopefully, if I do a good job, and hopefully if they like the way that I do business, then I will get a chance for that business also. But more importantly, it's for that referral partner. It's for that real estate agent, because out of those 18 homes, I have no idea how many people are going to pay cash. I have no idea how many people already have a mortgage person or anything along those lines. So it's giving from abundance. It's helping that referral partner. It's like Zig Ziglar said, and I'm probably going to bastardize this, but if you help people get what they want, you will in turn end up getting what you want.
Right. Now, are you tracking your referral partners, to figure out which ones are eating all your donuts and not giving you any donuts in return?
Somewhat, but it's not a you give me, I give you type setup kind of thing, because you can't control that. We've got agents that have turned the leads that we give them. Let's say they have credit issues or something at that moment. So instead of just cutting them off or not doing business with them because that turned into a lease as opposed to a purchase, well, they still helped me out. They still were able to help that person who needed a home for their family in a different form or fashion. So it's not tracked and traced to the nth degree and people are held accountable to. But yes, I see the number of leads that come in, the number of leads that help people and so forth.
Right. Okay. Now, in my prep for this interview, I fired up my own spy tools to take a look at what kind of online ads are running. My tool doesn't cover Facebook ads, so I couldn't look at that. But I didn't see you running any ads on Google or Bing. What's your thinking behind that?
I do run them. You just didn't see them. I don't know what tool you're using. I'm big into Google AdWords, but I do it in a different way that you probably would not have looked for. I've got a couple YouTube channels that I advertise, and I'm out there, but it's more of satire than it is anything for business. It's more of a credibility and someone, facial recognition than it is begging for mortgage business kind of thing. But no, I'm very much a fan of Google AdWords and use it on a daily basis.
Okay. Well, the tool I use, enter in the domain name, and it pulls up the ads it can find, right, looking at the, based on the landing pages and so on. So it sounds like you're not sending AdWords to landing pages on the Hancock marketing website. It sounds like a different domain for those.
Correct. Okay. Correct.
So what's your thinking behind doing it that way? I know you mentioned earlier your Hot Homes and Katy domain name as opposed to sending everything to Hancock.
Well, that's not a domain name. That's a Facebook page. So it's not a domain name. And my thoughts on it, nobody wants a mortgage. It's something that somebody, it's a must-have, or for 69% of the country, it's a must-have. It is not a want to. So my thoughts on it are, I don't want to be that guy that's in your face talking about something that you don't want to do anyway. I want to be the relief or the answer for what problem you're trying to solve. Your family has grown. You need a larger house. I want to help you solve that problem. You have got a new job, a new position. You've gotten a raise. You've gotten a tax return. You want to start investing in your wealth. I want to be that person who helps you solve that solution. If you, and this is something I think people are making a mistake on and missing out on. Anybody that's looking to buy homes now lived through the mortgage debacle that happened from Wall Street back in the 2007, 2008 era. So the word mortgage is not a good thing to anyone, in my opinion.
Right.
The children, the grandchildren, everybody lived through that. So I don't know why people would advertise something that is not something that's wanted. It's something that's needed.
Right.
If you pay attention to any of the commercials that go on, it's talking about Mercedes or Chevrolet is having a sale this weekend, and it's 0% interest, which is something that a lot of people like. It's payments as low as $300 a month, which is something that people like. But they never go into a 72-month loan at 16.9%. It's those things. So what people want and what they need is the money, and they need a professional to tell them what it means and how it's going to work. But nobody ever shops for it. They don't want it's not a fun thing. A mortgage is not a great thing.
Right. Totally understand that, especially after the crash in the housing and the mortgage market,
Yep.
a few years back. Interesting aside, mutual funds. They too were renamed after the big depression in the early 1900s. I think they used to call them unit trusts or something like that way back then. And then after they crashed, they rebranded that product into mutual funds for the same reasons.
Exactly.
So, two last questions for you, Jonny. Who are your ideal clients? And I know from clients it can be not only people who are seeking a mortgage, but also branch managers and loan officers and maybe even your referral partners. And what's the best way for them to contact your company?
So I guess my perfect customer, like you said, there's two of them. My direct customer is a branch manager, loan officer that is looking to better themselves, looking to expand, looking to truly help and be part of their community. Sit in the PTA meetings, be part, sit on the church pews, be part of the community. That's my perfect client on a first level. On a second level, my perfect client is either someone who is looking to purchase a property that is either not getting the information that they need, not realizing that maybe their gut instinct is telling them that this big behemoth bank that says they're going to close your loan in the next 3 months probably isn't going to. It's the people who want to do business with their local community. That's my secondary perfect customer, helping their local community. The way they can get a hold of me is my information is everywhere out there. My name is Jonathan Fowler. I go by Jonny. My email address is jfowler@hancockmortgage.com. My direct line is 855-566-6990. My cell phone is 281-352-7307. My website is hancockmortgage.com.
Jonny, would you mind spelling out your email address? I know Fowler might not be obvious spelling for everyone who's out there.
Great point. I appreciate that. So it's the letter J, F as in Frank, OWLER. So J Fowler at Hancock, HANCOCK, just like John Hancock, Mortgage, MORTGAGE.com. J Fowler at HancockMortgage.com.
Fantastic. Thanks so much for joining us today, Jonny, and sharing how you help grow your company's print across the United States.
Malcolm, it was absolutely wonderful. I really appreciate this. And I must say, I've done hundreds, if not thousands, of these interviews, and I really love your style. It's really refreshing to talk to someone like you.
Thanks for sharing that. I appreciate it.
Yes, sir.
We've been speaking with Jonny Fowler, the Senior VP at Hancock Mortgage, about how he grew his company's footprint across the United States. For interviews with other fast-growing companies, or to learn how we can accelerate your firm's high-value sales through automation, visit Eversprint.com.